Hello, everyone. We are live. Welcome to Wednesday's edition of the Fivers Futures live trading session. I am your host, Dave G, as usual. Let's see what we can get into. And guys, don't be shy. Let me know in the chat where you're watching us from. Let me know what you're trading. How has your week been going so far? And feel free to ask me any questions that you can think of. All right. So we're going to dive right in. We're going to do things in reverse today. Usually I go through the indices and then I check out the commodities. So, oil and then the metals. So what we're going to do today is we're going to do it in reverse. We're going to start with oil. We'll do gold and then we'll get into the equities and hopefully find some good trading setups, right? Yesterday we had the PPI come out. Whether or not it had a huge effect on the market, what we can say is we have been pushing upwards consistently. And of course, the fact that the Strait of Hormuz has been blockaded by the US has been also a driver of these markets. Now, as traders, all news aside, I like to take a technical approach to charts, and it is funny to see how, even with the news, the charts still respect logical technical levels. So we're going to look into that. We're going to check that out today. And since we're talking about market structure and price action, I will show you, as usual, how I see things. Had some nice little setups yesterday. I took them after the stream, and I had told you guys that yesterday I was going to trade smaller and kind of pull back because I had gone on tilt. So, but we're back. We're good. We have fully resetted. My mind is where it needs to be. So let's get into these charts. And don't be shy, guys. Let me know where you're watching us from on the chat. Let me know who's here, and let's get into these charts. All right. So I have CL up right now. We have the oil futures. And there was a really nice setup on the 13th, actually, that I took and didn't fully take the 2-to-1 risk reward, but I think I did a 1.5 on that. But I think that that is a nice setup that I can touch on, and I'll speak on it because Steve, who'll probably be joining me later, usually likes to trade this setup. It is a bottom breakout, basically. So looking at it on, let me zoom in a little bit. Let's put this on a 5 minute maybe. And then let's go to the 13th. All right, here we go. So really nice setup there. It happened later on during the day at around noon. So we had this range form, and then price started to compress. So let's get our little, where is it? Where is it? Where is it? I need to have a shortcut for the tools there. Where's the, yeah, I like the path. Let me put the path right there. So we'll have the path handy. So yeah, so we had price compress like this, and you could see how price is getting tighter and tighter. And here we get a test of this downtrending line here. And for a good, what was it, 2 hours, we tried to push above that 104 level, but we were unable to push and we continued further down. There was another attempt to push there. And finally, we get our breakdown right here after the New York Open. So this is your first indicator of, okay, we are probably going to push down. Now, it's important to note that there was a gap there, right? And as we know, gaps like to get filled. Maybe not immediately, but in this case, it happened the day after. So the other interesting thing to see is we started trading above VWAP and we're gradually getting below VWAP. So for those who don't know, VWAP, volume weighted average price, It's the average price that is being paid for the asset, or the average price it is trading at. But different from a simple moving average, the volume of transactions is weighted in there. So that's since, for me, volume really takes precedent in my trading. I like to use this indicator. So we break to the downside, and then here's the real confirmation. We get a retest of these bottom levels here, and that's where you can really scale in and get big in this trade, because you have a clear break, a pullback that is not behaving like a V-shaped recovery. So we're seeing, a sideways channel building there, and we're unable to push higher, and then we drop to the downside. So you could have easily risked this prior high instead of the range high, and that would have been risking this prior high. It would have been a 3.5 to 1 type of trade. That is, of course, if you only did a day trade and only held until the end of the closing session. But if you held until the next day, that was easily a maximum. Yeah, that could have been an 8 to 1 and even 10 to 1 trade. So it would have been an awesome trade on CL if you caught it. If not, well, it's one to keep in the books, study, analyze, see what happened there. This way, next time it comes around, you could possibly take it. Now, the good thing here is that oil is inversely correlated to the indices. So as oil pushes down, well, our indices will push up, and that's what's been happening, and it's been raging. We've had back to back to back green days, and we're going to check that out. But that's what we have on oil for the past few days. And right now we are hovering around these levels, and we will see what happens. Let's check. Let's put this on an hourly chart here. So we are at prior areas of support. So we might see some hovering, some sideways action there for the next couple of days while price decide what it wants to do. Or we might push further down and go retest those lower 80s. So we'll see what happens there. All right. Good morning. Well, good day actually to you. It's morning for me. But we have Daniel in the house. Always a pleasure to see you. Thank you for being part of this live broadcast, and we will see what we can get into. I'll also let everybody know that I traded last Friday exceptionally live with Trade the Pool. We traded during CPI news, and today I'll be doing a webinar on the trades that were taken and possibly how you can approach trading during pre-established news events. I'm not talking about, breaking news we get sometimes. I'm talking about trading around things might happen. So CPI, PPI, et cetera, et cetera. You can take advantage of efficiencies there. You can use directional strategies or mean reversion strategies. So we'll be talking about that after the live broadcast at noon. All right, so now that we've checked out oil, let's jump into gold really quick. Gold continuing its push up. I know a lot of people started getting short around the April 7th and maybe around April 9th, thinking that we would get a further push down and maybe go retest those 4,500 levels. But of course, these days with the changes in the news, the direction can change on a dime. And right now we have continued to reconquer those, we have continued our uptrend, and we are, in my opinion, aiming towards those 5,000, 5,100 levels. The 5,100 area would be my inflection zone. So inflection means As long as we remain under there, there's a possibility that we might revert back to the upside, to the downside, sorry, especially considering this area that we had here of consolidation right before the break. So it is entirely possible for us to, continue that structure to the upside and go retest this $5,000 area. And if we are unable to find the strength and the volume to push through this, then there will be profit taking, and everybody who's been long from the 4600s, from the 4500s, etc., will start taking profits there. And if we curl back down, then it's possible that shorts enter and we go, form another down move. Now, we can zoom all the way back out to a weekly chart and take a look. I remember talking about this with Victor on Monday. We have seen green weeks for the past 4 weeks, which is very good. But we have a very important area of liquidity here between, 4,100 all the way to about 4,500. So it is entirely possible that once once the trend gets exhausted around these previous levels here, we might go and retest these lows. Now, will we go all the way down and retest maybe the mid-range of this area here, or will we stay above and kind of retest this initial pockets around the 4,500s? We will have to wait and see, and that of course will depend on the whole geopolitical situation. But always have, a bullish case, a neutral case, and a bearish case. That is always what I do when I am trying to trade, and I like to trade either the bullish side or the bearish side, and try to stay hands off when things are just moving sideways. All right, so that's what we have on gold right now. For the day, we have a possible continuation of the uptrend forming. So if I was to, trace a trend right there using these levels, this structure right here, using these two highs, and we would copy to the old high. So we have gone here and rejected. So what we need is for this area to hold. So we formed our downtrend here. We've pushed up. We've consolidated here. So on an intraday basis, we need this area to hold. Maybe we wick down and wick back up, and to break and possibly pull back for us to continue to the upside and go test either these prior highs or these initial highs over there from the prior day. So we'll see if we can get that today, if we continue the bullish uptrend. We'll see if that's a possibility. That would be an interesting setup. The great setup would be using VWAP, breaking above this little downtrend there, pulling back above VWAP, having some volume come in, and scale in there to be able to capture a move to the upside. So we'll see if this happens today. Actually, I'll leave my arrow there. So this would be, your bullish trade. The neutral case is we continue to hover around here for the rest of the day and nothing really happens. Maybe we push a little bit up towards VWAP, we pull back, move to the side, etc., etc. We'll see if that happens or not. And then the bearish case is we lose this structure and we push to the downside towards these initial lows and maybe towards these levels right there. We'll see what happens. I'll leave this here. We'll come back to check on it later on after the open to see what happens. Now, let's go into my platform, into Black Arrow. You guys know on the Fivers, that is what we use to trade the futures. I don't need this anymore. Let me get this out of the way. So I have modified my chart a little bit so it looks more like the way I trade. I have my daily time frame there and my shorter time frames there, all bounds between the 1, 5, or the 5:15, depending on the hour of the day. And we are consolidating nicely above here, above this $26,000 level. And I remember yesterday with Jane, we were talking about how we could possibly go and retest those levels. And man, I could tell you, yesterday was a raging bull day. Let me scale this up. So yesterday, I took a setup which was a late break and retest. So you guys know I always talk about the opening range setups. So what we had yesterday was our opening range here. So the range was developed in the first 15 minutes of the day. So this was our range. And I really liked how the levels were kind of respected and performed very well yesterday. So I'll take these dotted lines and put them at the 50% of the range right here. And look at how nicely this behaved yesterday. So hopefully we get some kind of similar price action today. So we had let me get this here. All right, so we had our range form right here, and then it tested the high of the range, pulled back to 50% of the range. And I know Daniel loves these setups. Pull back to the 50%, and then we broke out of the range. And we got exactly to the other 50%, pull back again to the top of the range. Let me get this here. Pull back to the top of the range. And that is where I entered my trade. Now, you look here, and what shows you that it's very bullish is that it barely stays at the previous high. So this is a 5-minute chart. We barely stayed here, and then we continued our grind up to the upside. Now, the other thing I said when we were talking with Jane yesterday is that when we have a trend and we are moving slowly, you see how we have small candles accumulating here? At least on the 5 minutes, we don't have huge displacement. So for example, here you had one candle and then another big candle, engulfing the previous one, and another one. When this happens and the moves happen fast, well, it's highly likely that you might get a sharp pullback. But on the contrary, when you have your candles moving slowly like that, that is the indication of a possible trend day. And that is exactly what we got yesterday. We got a full all day trend day. And the only significant pullback we got was around that's 150. So around 2 p.m. This was our pullback, but it was another opportunity to get long. And you're going to see how well the levels reacted. So first opportunity to get really long, of course, unless you got long right on the open at 9:30, it was this pullback here at the 50% of the range. Second opportunity, which I took, was, you get in long here. And once you get in long here, you're measuring the move. So I'm using the range to kind of measure the moves. Range is a full move, and then you have the 50% of the move. So when I got in here, I had two targets. Target number one was the height of the range. Why? Because these are the common failure areas. These are the areas where sometimes you will see price get to and pull back or completely reverse off of. So that's why I'm using these kind of measured moves. So my first take profit was here, and then the second one I was aiming for 50% of that range. I didn't quite get it. I got out there on this red candle there, thinking that okay, we're probably going to have a deeper pullback before we continue up. But that wasn't the case. I was wrong, at least on the total continuation. The deeper pullback happened much later, but it was around noon, so it was a logical spot to take profit. But look at what happened. We got there, pulled back slightly, and continued. And then once we got to I'll call that the second standard deviation of the initial range, then we got our significant pullback. And guess what? It was right around the 50% of this range, and we look at how well it reacted. We pull back under it, pull up, form this kind of W-shaped pattern with a lower high and with a low and a higher low, and you could have gotten in here and continued. So there were so many opportunities to get long. Honestly, if you bought anywhere and you didn't sell until the end of the day, you would have been profitable. So yeah, awesome there. Oh, we got Void in the house. How you doing? How you doing? Good day to you too. Daniel said, made life easier for Dave so he does not have to explain who I am every session. Nice, 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 nice. Thank you for making my life easier, Daniel. I appreciate it. Even though I kind of like the nickname, I like Insomnia Trader. All right. So what are we this was yesterday, but what are we looking at today? Well, we are still hovering around this $26,000 area or around these highs. And if we zoom out on the daily chart, we're smack dab in there. We need to be conscientious of, okay, let's form the first case, the bullish case. If we continue to be bullish today, what are we looking at? Well, we are looking to go and test these prior highs, right? We have the 26,250s, we have the 26,400s, and if we are really bullish, there are these previous highs at the 700s that we could possibly go and retest. Now, that is if we continue this raging bull area. Now, I said that we had to be, be mindful that we're getting into kind of this previous resistance zone. So any of these levels could be the turning point. So if you're long, you just want to keep that in mind. And at the same time, on the ES, we are reaching that critical $7,000 level. Let me get this on our charts right now as a reference. So let me put this on a daily. So you can see how on the ES, we are, slightly above 7,000, reaching those previous highs. And that's where we stalled for, I would say, about 3 months last time we got there. So we want to see, okay, can we break through this decisively, or are we going to hold and, are we going to hesitate and pull back, right? Because we've been trending up for a while, and that is great. We've been trending up since, March 31st. So we're about 2 weeks into this up move. So can we continue or not? We'll see. We will see. We have the systematic trader asking, how do I mark this range? So are you asking me how I mark the opening range? If you're asking that, I'm going to show you right away. So the opening, so these ranges, I mark them simply, with a box. And what I do is I'll have my box ready and I wait for the first 15 minutes to happen, and I just mark the low and the high. And that has proven, based on my back testing and everything I do, if you use the first 15 to 30 minutes of the range, that is a good reference, especially on trend days, of where we might get entries and exits, right? I used a similar range previously on, which day was it? Was it this day? Yeah, that was April 13th. So let's get the open. So for example, if you want to mark it, you grab your rectangle there on your trading platform, and then you check, okay, we opened at 9:30, so it was there. And we mark it until 9:45. So 9:45, this is our low, and this would be our high. And I already, I had a line there. And then what you do is you copy that range and you put it there. And what you're looking at is, okay, how do we react to the full range and how do we react to the 50% area of the range? So 50% right now is this, and down there it would be this. Right. So on that day, we were very bullish. The momentum was very strong. So you will see reactions at the bottom of the range, at the midpoint of the range, and at the high of the range. Of course, it's not going to be 100% exact, but it's a good reference. So if you look there, look at what happened. We broke out, we hit barely that 50% area. We pulled back to the high of this range, we held, and we continued. So this would have been a great entry. You break out, you pull back, you enter here, and then you hold. And your targets are what? Your targets are 50%. And you can see we moved up and pulled back right from the middle of the range. And then we went and retested that high again and continued up. And what happened? Right as we got to the high of the range, you see all those wicks happening there? Well, that's profit taking and people trying to push and shorts entering, but the shorts got overpowered and we continued up. What happens then is we again continue and possibly we could find another range up there. And on a good day, you will get 2, 3 of those ranges throughout the day. Right there, the New York session closed and we continued through those Asia highs. And if I'm a betting man, right there at that profit taking is going to correspond to another possible. Yeah, so we barely got to the top of the range and then we pulled back. We pulled back to where? To the 50% of the range. And then we hovered there the whole time. And 50% was the support level. And then we continued up and retested those highs. So these ranges are very, very good references in these market conditions. When the conditions are different, when we're, trading sideways. So for example, let me try to look at a period. So for example, in this period here on the daily from, I would say mid-February to about mid-March, these levels were trickier. It's trickier to use these levels in these conditions. So that is to remind you that not all strategies will work everywhere. These strategies work in these ranges, work in directional markets. When things are either trending down, like we had from around March 11th to March 30th, and they definitely work when we are trending up. But when we are trading sideways, these ranges are not that you can use them as confirmations of whether or not we're in a sideways move. And what will happen during these times is that you see, okay, we are unable to capture these levels. We start to get out of the range and then we go back to the bottom of the range, and then we start to get out of the range and then we go back to the bottom, and then we form these sideways patterns. And that's when you can decide, okay, I need a mean reversion strategy. I can't continue to use trend following strategy. And today on our Discord webinar, I'm going to talk about that right after right after this live. So very good, very good. Thank you, the systematic trader, for asking the question. I appreciate it. High Precede 9880. Awesome to see you here. Let's see who else we got here. All right, I think I said hi to everyone. I don't want anybody to be jealous. Remember to like if you haven't liked the video. Also, remember to subscribe. Okay, so what I wanted to do was to prepare for the open. We're only 1 minute to the open, but here's what we want to keep in mind. We want to keep in mind that we have those Asia highs there, and we've rejected twice above here. So we want to keep that in mind. So we'll put a level there. It's a zone. Actually, let me just use one of my, do I have one there? Okay, I don't have one ready, so I'll just use a box. I usually prefer to put an area because it's not exactly a level, it's an area. So we are marking our horizontal levels here on the NQ. So this area we want to keep in mind. And then we kind of trended down to the inside part of this range. So we want to keep that in mind. All right, we've just opened. We want to see what happens. We're getting some rejection here. Okay. Then this would be the bottom of our range. We'll consider that a liquidity sweep. So now that we kind of have the range we're looking at, let me put these in blue. We want to see, okay, can price get out of here, right? And if it does, how does it get out of here? Does it do it decisively or not? And then our line in the sand is kind of this $26,000 level. Where's my VWAP? I don't have VWAP there. Oh, okay, there we go. That's where my levels are. So I'll just switch from this to my day analysis. I was on the wrong tab. Okay, so this is the area we're looking at, and then we had our trend. You guys know I always measure the speed of the action, and yesterday's trend is continuing. So we're kind of catching up to that trend. And then yesterday I talked about primary trend and secondary trend. And if I zoom out, so let's go on maybe a 4-hour, you can see that in green, we have our primary trend, our primary move up, the intensity at which we're moving up. And we're right here sitting in the middle of the range. So we want to see, okay, today, what are we going to do? Are we going to continue to push up in that range, or are we going to, on the contrary, pull back to the lows of this range? So we'll see. We just have to be mindful of that. All right, so we're keeping that in mind. Now, let me look at the volume profile. So we have our low volume node up there, which is an area of liquidity. We could see that by the wicks. And then we look at, man, there was so much volume traded here and so many levels there that honestly, I'm not even going to use the volume profile for the previous day. If we move down, I'll just be targeting the areas of consolidation. So we'll look at this level here. We'll look at this level here, high volume node. So let me just put these previous high volume nodes there. And that is, of course, if we have a bearish scenario and we decide to pull back. We will see if that happens and we'll decide how to trade there. Okay. All right, guys, let me know what you're looking at. Are you looking at the Nasdaq? Are you looking at the ES? What are you looking to trade today? Are you looking at gold? Are you looking at anything else? Let me know. All right, so let's reset this. Now we want to see, okay, can we form a range? What is this range going to be? And then we'll evaluate what trades to take based on that. So this is the NQ. We're gonna just let it do what it does and see. Now let's dive deeper and look at the ES. I'm getting some weird prints there. There's some data missing. All right, I'm going to leave the 5-minute chart because I'm getting some weird prints on the ES. Now, on the ES, we have, we're reconquering these highs. So this level here is looking to become support, right? So the $7,000 area level, that is where we might see support come back. So we will see what happens on the ES. Let me get my levels here. And we're trading above VWAP. We got Bad App. Welcome back. Welcome back. You just long gold, okay, at 48.15, and you need advice on take profit 48.34. Is it fine, or can I look higher? Okay, we're gonna look at gold. I can't tell you where to take profits, but I could give you some references because you you need to make your own trading decisions. But let's take a quick look at it. I'm gonna leave the. Okay, so the just quick reference here. The Nasdaq is showing relative weakness like yesterday in comparison to the ES. So I just want to have that and have you guys keep that in mind. You said you got in at 48.15. So 48.15, let me look at gold. Okay, this is the futures, but you're probably looking at gold on the CFD side. So I have to look at the same one as you so you could you see what number it's trading at. 832. And then what is GC trading at? 838. Okay, so not a big difference here. All right, so you said you're looking at 834. You need to tell me what price you're trading at right now because I'm not getting the same price. Right now it's trading at 48.39 on the future side. What price is it trading at right now on your side? Because I don't know where you're in and I can't really tell. But what I could tell you is based on what I'm seeing right now, okay, we have this consolidation as a reference, right? As long as we're able to stay above this, that is fine. We're bullish. So hopefully you got in somewhere around here, maybe at the breakout, or if you got in earlier, good on you. Now, what we want to see is, since I'm trading VWAP, we want to see, okay, what were the previous levels where we hesitated? And this is a 5-minute chart. This is for a day trade, not for a swing trade, because that the approach would be different. I'm giving the day trade approach. What we want to look at is, okay, the previous levels where we hesitated at were right here. So that's where we had a breakdown. So we're coming close to that level and we had a little bit of rejection. Then our next level is all the way up here, around 48.70 on the future side. It should be around the open breakout, so around 48.15 in your chart. So 48.15. You got in at 48.15. Okay, that's a great entry. You got in at the bottom. If you got in right there, that is a very good entry. So you said your target is 48.34. So all you need to do is look at previous areas of consolidation and see how decisively we break through them. And then I don't know how many contracts you're holding. You can decide. What I usually do is I will have a payroll. So I will have a place where I take, depending on how many contracts I have on, 1 or 2 contracts off to pay myself. And this is usually a 1-to-1, a 1-to-1.2, 1 to, it's not a huge trade, but it guarantees that, okay, I got paid. And then I hold the rest for logical areas of profit taking. What are the logical areas? We have this area here. So you just have to look at it visually because I can't give you exact numbers, nor I can tell you exactly where to take profit. But this area right here, which we're getting close to, and then the second area we're looking at is this area right here. That is, again, for the day trade. So looking at the structure that I showed, this is what you're looking at. You're looking at, let me just continue this. You're looking at, the move. Oh, come on. You're looking at the move to go and retest those highs and possibly pull back and continue to retest those highs. That is one possibility. So we'll see what happens, and it needs to happen relatively fast because this is the open. So when I say relatively fast, I'm saying within the next couple of candles right there. So we'll see what happens. Let me just take a quick look at oil while we're at it. Is oil moving down? Okay, this is good for equities. Let me just look at the overall market internals. So we have the VIX looking good, advanced decline, more stocks advancing. The tick chart, we're ticking green. Volt ratio is also green. All right. I have my nice indicator there that I built with Daniel, which I'll probably be using live today because I think we're just at the point where we could use it live and share it with the community. So I definitely want to start sharing that with you guys. We are moving nicely on the NQ. Let's look at the YM. Okay, showing a little bit of weakness on the YM, but we got this nice buy there at VWAP, which is good, at least on the 1 minute. Let me look at the Russell pushing up. Okay, so we're looking good. By the way, I hope I answered your question, BADAF19. Let me know if you need more clarification. I'm kind of new to the market. News have me making insane. Nah, man, there is absolutely no dumb question. The only dumb question is the one you don't ask. So you can ask me anything. That's what I'm here for. You just need to, when you're trading, don't have a pre-established plan, right? That's why I showed ranges. Say to yourself, okay, if I entered here, let me go back to gold really quick. We still have 5 minutes until the range I'm looking for opens. Let me get these lines out of the way. Yeah. So what you want to look at is, okay, how did price behave prior to this? And where are logical spots? Well, look here, you could see it. We moved down and then we moved up. And what happened in this area? We had hesitation, but this hesitation area matches this previous area of hesitation. And then once we break out of there, where's the next hesitation area? Well, the next hesitation area is here. So we want to see, okay, what are we going to do? Are we going to just break out of there, or are we going to hesitate like we did before? Well, it's highly likely, I would say 60-40 or 70-30, that it's possible we hesitate here again, but it is not impossible for us to continue up, which is why you decide, okay, say you had 4 contracts. Well, you entered here, you get here, you get to your level of hesitation. Well, maybe you take 1 contract off, you get paid for your trade, and then you continue to watch what happens. Are we able to continue here or move up? And then how much time did we spend there? And when was it? So this was around midnight, and we spent, let's see, around here, we spent 1 hour and 15 minutes. So is your trade plan holding the trade for 1 hour, or are you planning to hold for, you know, uh, 15 minutes? Or are you planning to hold for the whole day or multiple days? You have to ask yourself all these questions as you're holding the trade and kind of seeing, okay, what is this trade developing into? Am I taking a day trade or am I taking a swing trade? What am I doing? And you can see here, right at this pocket here, we are seeing some profit taking. So we'll see what happens. It is 9:43. I want to switch over to the indexes, see what's happening. We're getting a pullback on the ES. But now we want to see, okay, how significant is this pullback? Is it a pullback on volume? Sorry. Or is this a fake out? Is this just people taking profits and then we're going to revert back up? We want to see what happens there. I'm looking at the ES, but I possibly want to be taking my trade on the Qs on the Nasdaq. So we'll see. Okay, looking nice. You see how let's look at history. History repeats itself, or rhymes, but doesn't repeat itself. We had a rejection here, during the pre-market session. We hesitated here. So that's 1, 2, 3, 4. We had 4 rejections. So 1, 2, 3, 4. And then this is 5. So we tried again this morning and we were not able to break there. So that is giving me information. What is this telling me? It's telling me that around the 2640s to the 2650s, we're selling. We're not able to push higher there. So what do I want to see? Well, I want us, if we're leaning bearish, what I want to see is, okay, can we go form a lower low here? Of course, there's going to be profit taking at these previous areas of consolidation. Look at how we're pushing lower. And once we try and go reconquer these levels, are we able to push up or no? If we're not able to push up, we enter short. If we are able to push up, then we will enter long. And if we're not even able to reconquer these, then we look for a place to go short. So we'll see what happens there. Let me just look at the range. All right, the range is nice still to look for levels. You can see how the crowd here participated. We had a nice push on volume. Now we want this volume to let us know, okay, if this was a store, did we just have a lot of people run out of the store, or did we have a bunch of people run into the store? Because remember, these are two parties exchanging here. The volume is just telling us how many things were exchanged. We don't know yet 100%. Are we holding to revert back up, or are we going to move back down? So let's keep watching. Let's keep looking. And then this one is for the systematic trader. We're gonna trace our range right now. So the easiest way to do this is you put it on a 15-minute. This is 9:30 right there. And this is our opening range. Whoa. From this high to this low. Whoa, let me get this out of the way. From this high to this low. Okay, we have our opening range for our opening range traders. We'll put it pink. I don't know why, but I like to put it pink. And this is our opening range. Now, where is the 50% of that range? It is right there, and it's exactly where we are rejecting. Right there. You see? So, what are we targeting? Well, we want to see, can we hold above this or not? If we're not able to hold above this, then it is a possible short entry. If we are able to hold above this and we just retested these lows and made a liquidity sweep, well, we are probably going to be long biased, and we could see buyers are stepping in. So this level has been denied, negated, whatever you want to call it. Now we're looking at this level. Is this level, so at these highs, not these exact highs, but lower around this pocket here. I don't know if you guys listen to Linda Rashke, but she speaks a lot about pockets. So we want to look at, okay, how are we going to react in this pocket here? Why? The market is forward looking. If we are looking to short, we're not going to wait for it to go all the way up there. We're going to start shorting maybe here. Of course, I'm talking about the market. I'm not talking about us traders. So we want to see, okay, what happens there for in order for us to short or not short. Maybe this was our entry long, but we want to be patient. We want to be disciplined. We're not going to take random trades right now. So let us see, can we break out of the range or not? And then we could check the other assets for relative strength. So far, as of yet, we were more bullish than bearish. So we've tested this level 5 times, and we are back at it for a sixth time. So let's see what happens. All right, we're seeing a little bit of hesitation here. So let's see what that hesitation gives us. Some traders like to anticipate trades and, get in right where they're not unsure, and that's perfectly fine. It's probably where you get the best entries. I kind of like to wait for a little bit of confirmation. So I won't enter on the first red candle. I'll enter maybe on the second or on the third. I like to wait a little bit. And then the tricky part here is we're getting close to 10 a.m. So 10 a.m. usually gives us another directional view. So I want to see what happens there. Now, you of course need to always zoom out and have a bird's eye view of your trades. So you want to see, okay, what is it doing on the daily and what is it doing on the the higher end charts. And I like to have, I bounce around from an hourly, a 15-minute, and a daily, and I'll keep it keep them there and we'll see. So we're seeing a little bit of rejection here. We're seeing a little bit of selling. And now let's see, can we get back and hold above this 50% or not? So we're letting the price tell us what it wants to do. Systematic trader saying I also use the ORB, but when the range breaks and one more candle closed on it, but the new teachings. Okay, nice. Yeah, there's look, there are levels to trade the ORB. There's the very basic way, which is just taking it on the break, but you could add so much to that for your trades. So that's what we're trying to do here, is having a more disciplined, a more nuanced approach to trading the opening range. So far we're looking bullish, which is nice. We've held above that 50%, which is nice. So one thing a lot of traders might do is just get in on the break. Sorry. And I'll do that sometimes, but not always. The better thing to do is, so the reasoning behind getting in right on the break, say we were to break to the upside, is okay, you don't want it to leave without you. And that's perfectly fine. Sometimes it will leave without you. But it is also good to wait to see if this is a fake out and wait for it to, kind of retest that level, which will happen more often than not. So you could scale into your trade, get in if you're, of course, looking for the break to the upside. You scale in there, you wait for it to pull back, you add to your position, and then you adjust your stop based on that. All right, so we're looking at the opening range here. Let me just look at something else on another chart I have here. Just 1 second, guys. All right, this is not loading. Come on, load for me. All right, so we're still inside that opening range, retesting these highs. So this is still looking neutral to me. It's not looking too, it's looking more bullish than bearish just based off of VWAP. It's not looking too strong either. So we'll see. And we see some selling here. And we are diving right back into that 50%. Let me just go on a lower time frame. All right, let's see what happens. We are seeing some rejection. I'm just looking at the other, I don't want to be bouncing around too much on this screen, so I want to see what the other assets are doing. What is the ES doing? Because the ES showed relative strength in comparison to the Nasdaq, but right now the ES is showing weakness. Let's see, can they really buy it, and can they really push this to the upside? So this is showing us that, okay, buyers are stepping in. So we have 10 o'clock in 7 minutes. So we could possibly anticipate the break. We'll see. This is an interesting information here. You see how they bought right above this 50% here? This is good information. So let's just be a little bit more patient. Let's see if this can hold. All right, we're about to get the break. And we can possibly start scaling in. Let's just see. This is coming in with volume, but we're seeing, we're seeing it wick. We're seeing some rejection here. So we're just being patient. We're not in a hurry. Sometimes I'm too patient and miss the trade, but hey. So let's see. Let's just see. Let me take a look at how gold is. Whoop, sorry. Let me take a look at how gold is doing. 1 second. So, that's why I don't like to necessarily get in right on the break, because sometimes it's a fake out. All right. So I'm going to try, since we're retesting that pocket and we're retesting these highs, I want to see, was this a valid rejection here? So I'm putting a sell order, a sell stop order, and we'll see if we can get a short. Now, if the short does not work, then that will confirm that, okay, we are bullish. So I sometimes like to enter opposite of my bias, and that is just another check in my favor for the trade. So let's see. All right, we opened above, and we might get the continuation up if we never get this short. So let's see. So I'm shorting right below where we had support. All right, I have a superb and very, very interesting question here from Proceed 9880. He says, trading is a probability game. So how should we handle risk management and psychology to achieve consistent profit? That is a very, very good question. That is also a question that you cannot answer with one simple sentence. So I'll try to explain and get into that as much as possible. So let's break down your question and see what you mean. First of all, you said trading is a probabilities game. Definitely, trading comes down to math. And I did a presentation regarding that. It was called The Math Behind Profitable Trading, something like that. I'm probably botching the title, but it was to show you that, okay, it all comes down to math. And I don't know if you guys have tried that, but have you ever tried to just flip a coin a bunch of times? I've flipped coin like hundreds of times to just see, okay, what was the outcome. Probabilities game depends on your statistics. For example, me on bad trading periods, my win rate, this is where win rate and risk to reward ratio comes in. So let's talk about the math first, and we'll talk about risk management, and et cetera, et cetera. And we're looking bullish, guys. We're looking for that, that you see, I never got my short. So this is a pretty bullish sign. So let me take the order out. Let's wait. Let me wait for this to build while we talk here. And 10 o'clock is right around the corner in 3 minutes. Let's just see what happens. 1 second. I'd really like to take this trade live with you guys. But yeah, so probabilities. My win rate oscillates between 38% and 65%, right? At my best, I've probably seen 75%, but that doesn't last long. So knowing that on average, I have, let's say, a 52% win rate, all I need to do to be profitable is to risk $1 to make $1.20. So my risk to reward can be 1 to 1.2, 1 to 1.5, right? I don't even need to make 2 to 1 to be profitable because my win rate is usually slightly above 50%. Of course, it's better to make 2 to 1 or 3 to 1, which means for every dollar you risk, you make $1.20, $1.50, et cetera, et cetera. Now, that is the first thing you need to know, and you need to figure out what is the expected value on every trade. So if you lose $1 on every trade, well, on average, and then once you lose $1, you make $1.50. Well, on average, your expected value on each trade, if my math is right, is $50, right? So your expected value is not negative. It's 150 minus 100 that gives you your $50. So once you have that number, that expected value, and that is assuming that you already have a trading strategy, et cetera, then comes the second element, risk management. Risk management is what? Let me explain it to you visually, right? If I am going to take a long and I know that my strategy says it needs to wait and come into that 50%, and that's where I'm going to enter long, and then my stop is going to go there. Well, that's what you need to execute. And if you don't see that, then you don't execute the trade. That is the first risk management. The second thing is, once you're in the trade, you respect those levels. As long as you're not in profit, you're respecting where your stop is. You know that, hey, my stop goes here. My stop goes, for example, you enter here. Let me put a buy limit order here. You enter here if you bought here, and your stop goes below this. Well, that is your thing. You don't want to be moving this here and risking more and moving this here or moving this here. You don't want to be doing a bunch of these things. So this is a combination of, okay, risk management and psychology. The first thing is you have your setup, you know your setup, you take that setup, and then you determine, okay, my strategy says I put my buy order here, I put my stop below the previous low, and then you stick to that. And once it gets to your stop, you respect it. You either take a smaller stop, or, all right, I think I'm getting that short I wanted. Give me 1 second, guys. I want to check. I really want to take this trade. But we are in those liquidity areas. Relative strength on the NQ. Let me see. The YM is pushing lower. Yeah, I'm not too bullish as of yet. Even though the Nasdaq is showing the strength that the other ones don't have, still leaning short. And I might be wrong, but we'll see. You see how we got this increased volume on the selling? This might have been a topping signal right there. But it might also have been the pullback we were looking for. So, and when in doubt, get out or wait. So I'll just wait. I'll wait for a clearer confirmation here of what's going to happen. All right, we just got 10 o'clock. All right, let me go back to the question. So first, we talked about expected value. You need to know on average how often you win, how often you lose, to know, okay, what is the percentage, what is your win rate? And that is, your win rate depends on your strategies. Do you have a strategy that you're consistently trading and that you consistently have stats on? You need to repeat the same thing to have accurate numbers. Once you have that down, you have your strategy, you have the expected value, and you can do that in the simulator. You know your numbers, you know your stats. Am I winning 50% of the time? Am I winning 30% of the time? Am I winning 70% of the time? And then you can determine, okay, how much do I need to win mathematically to make profit? And once you have that down, then comes the difficult part, the psychological part. The psychological part is what? It is your ability, based on your statistics and what you know has happened over time. It's the ability for you to repeat, 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 but repeat the same exact thing as much as possible, right? And not deviate, or as much as possible, of course, not stray away from what you know works. And that is the only way. What I'm saying, I know this is a long-winded answer, is you need to repeat. And if you repeat, if you have some edge, if your strategy wins a certain percentage of time, and if your wins are slightly bigger than your losers, you will be profitable over time. Now, how do you handle this psychologically? Well, you have to train yourself, and you have to kind of figure out, you have to journal and figure out, what do I do wrong? What do I keep repeating as a mistake? I remember, for example, one mistake I used to do at the very beginning was I was constantly moving my stops. Instead of risking 1R, I was moving it to 2R or 3R, and I was taking bigger losses than I wanted, than I should have, because I didn't want to be wrong, right? until you, for example, accept that and stop moving your stops, then your stats are not going to be accurate. So one thing you could decide to solve, and you tackle that, and you say, okay, for the next week, all I'm going to focus on, I don't care if I win or lose, all I want to do, a win for me is going to be not moving the stop. Then once you have that down, your next thing is, okay, my next challenge is I am going to wait for the setup. And then you do that for a week or two. The next challenge is, okay, now I am going to wait for the trade to get to at least 70, 75 to 80% of my take profit before I get out, right? I'm not just going to let it move and then, oh my God, I'm in profit, I'm out. Because again, that's going to mess with your stats. And then you practice. You don't focus on P&L, you only focus on little bits of your defects that you need to fix, right? You keep on fixing, and eventually you will get the bad out of your trading, because that's what you're really trying to do. You're trying to eliminate the bad habits out of your trading, and that's how you end up being profitable. Is it easy? It is not easy, right? It's like I don't know, dieting or losing weight. Losing weight is simple but not easy. Why? Because you need food to survive, so you have to eat. And then when they tell you, well, the simple way, all right, I think I got my short. So we'll see if this is the thing is, I'm still leaning bullish, but I need to confirm whether this is a long setup or not. So if I get stopped out of my short, then I will know, okay, we are definitely bullish and we will continue up, because this is a liquidity area, and I just want to confirm that. Now we've of course broken out of the trading range and we've pulled back, and this is possibly an area where we could enter long, but I just want to confirm this. And if this is the case, then I will flip long and continue. So I just the strategy I use to confirm. I'll trade inversely, and then if it doesn't work out, then I'll take the actual trade I wanted to take. So right now we are pulling back above the opening range. We're holding up, but it is a liquidity area, so I want to just keep that in mind. And I prefer to go short for now. And we should respect, if of course, if we're gonna go lower, we should respect those highs. So I'm not even gonna risk a full R. Probably gonna risk right there above these highs. So let's see if we can get it short. And if the short doesn't work out, then the long is on. So while this is building, while this is happening, let's just keep talking about psychology. So it is not an easy task. So in dieting, you know, it's simple: calories in, calories out. You need to consume, you need to burn more calories than you're consuming in order to lose weight. It's simple, but where a lot of people are unable to do it, and it's hard. Why? Because, well, you need to eat. And it's hard to not eat and stop eating and be disciplined and controlled. You have to fight your nature that tells you with every bone in your body, your brain is telling you, hey, you need to eat, you need to eat, otherwise you're going to die. Same thing in trading. You know, it's counterintuitive. You get in a trade, you're fearing. Why? Because you're fearing losing these profits. Oh my God, you know, I got in the trade, I'm starting to make the profit, but I have to hold for longer, and then it pulls back, and you just have to train yourself. It's like anything else. And it takes a lot of practice and a lot of time. This is a very long-winded answer, but if I could summarize it, is first, find a strategy, find an edge. And I recommend you just, you know, watch other traders that are more experienced and build your edge based on things that might be working, right? And I'm not just talking about random gurus and furus. Try to find people who are um, legit, right? And you're at the right spot. You're looking at the fivers. Once you have people you can look at and look at how they trade, and kind of find strategies that make sense, then you practice that strategy consistently. You practice it, and you try to execute it every time you see it, no matter what. And it's better to do it in a simulator because you're not risking anything. All right, so it looks like we're getting the long. We're going to give it a little bit more time. But this is break out of the opening range, retest, and it looks like we might be pushing up. So if we are definitely pushing up, the prior low is our risk area, and we will be targeting the highs of the range. So let's see if we can get that. Let's wait for a couple more minutes. Let's see if we can get it. Let me just check something really quick. I want to check how the other assets are performing. All right, so we have the ES reconquering. We moving up again. Let's see. Let me look at the YM. All right. Let me look at the dollar for a second. Dollar was pushing down. I'm just looking at market internals and looking at how everything else is behaving just to evaluate the trade we are taking here. All right. It looks like we're about to flip long. Let's just keep this for a sec. Of course, we need to see that strength come in. Because this is a common area of failure. Now, we've been pushing up for 2 weeks. Wednesdays sometimes are days when we get a turn and when we see profit taking. So let's just see what happens there. They're definitely trying to hold it up. So we might get the follow through we've been wanting. Let's just see if we get it. All right, we're moving above this. We've tried the short, it hasn't worked. We're looking to reconquer this, so we're going to go long right now. And then we're going to risk these prior lows. Let me put this in points. I just want to see, can we hold? And our line, my risk is there. This is a protective risk. Our line in the sand is the 50% of that opening range. If we can't hold above this, then the trade is off. So we'll see. We were at these liquidity levels. I wanted us to push down more sharply. We did not get that. We did not see follow through there after 10:08. We've seen continued buying, so let's see if we can hold. We've seen an increase in volume, so let's see if we can hold these highs and push higher. Proceed. I don't know if I answered your question, but let me know. I know it was a long-winded answer, but it's all about practice. Pick one thing to practice every day, and eventually you will get to where you want to be. Don't be in a hurry. That's what I can tell you. All right, let's see if we can continue to get this move up or not. I'm still not convinced yet because we are definitely in a liquidity area. So I'm not 100% convinced yet, but I like the way that we broke out, we pulled back above the opening range, and right now we seem to be getting, that push higher. So let's see if we can get it. All right. And then on the next candle, if we don't displace too much, I'll add another lot, and that will definitely be my line in the sand. Really good and super clear. Oh, well, I really appreciate that. And I look forward for more questions. Like I said the other day, I really enjoy this. I really enjoy the teaching part. It kind of helps me, learn more as well. All right, next candle is here. We're going to add a contract and hopefully we get follow through here. Otherwise, this will be a fake out. All right, so now for my opening range traders, here's what we want to see and here's what we're targeting. We take our range, we copy it, and we're looking at a couple of levels. We're looking at the mid-range here, which is where we're getting right now. And this is a pretty late entry, but whatever. We're looking at the mid-range here, and we're looking at these highs. So first profit would probably be here around these highs. So you can put it a little bit lower, and that would be what I call the payroll trade, where you get paid for your work. And then the next one is really free flowing. So we can just measure another box, and then we put the 50%. So you could have two areas to target. You could target the mid-range or you could target the high of the range. That all depends on how price is moving. And right now, price is moving higher. It continues to move higher. We are at that 50%, so there might be some profit taking, but don't panic. Just hold your trade, hold your idea. We have our planned stop losses. You know, my main stop loss is here, risking that prior low. My second stop loss is risking these prior lows here. And we'll just see what happens. And here we go. We're seeing the profit taking as expected, right at that 50% area. But here's the good thing for us. We saw increased volume here. So if that increased volume is the crowd moving into the trade and moving into, you know, what we think might be a further push up, then we're good. We're all good. We're going to keep holding that position, and we'll see if we can get to these highs. Now, the other thing you need to keep in mind is that the Nasdaq moves a certain amount of points every day. So we want to measure and we want to see, okay, how many points have we moved so far? So right now we've moved 121 points. So keeping in mind that on the low end, the Nasdaq moves 200 points a day. So far, we can continue to push up, right? We can move 200 points. We can move 250 points. We can move 300 points or more. I've seen 1,000-point days on the NASDAQ on breaking news days. So let's just hold. And the fact that it's moving slowly is a good sign so far. Now, anything can happen. Anything can change on a dime. We could have news breakouts. We could have whatever. And that's why we have these protective stops here so that we don't completely, blow out our account. So we'll see what happens. We are holding and we are watching the asset. Let's go now to a higher time frame. So honestly, what you do right now is you're in the trade, you've set the trade. Let me just put this here. There we go. You're in the trade, you've taken the trade, you have your trading plan, everything is more or less clear in your mind, and the asset is behaving like you expect. You see right here, profit taking, that is totally fine. Let's just hold, let's just wait and see what happens, see if we could get our first payroll here for the profit taking. This so another psychological thing I'm going to talk about is, it used to bother me a lot when I took my profits early, and it still does because I still do it from time to time, but much less now. You take a trade and then you get out early and you see that, okay, you were right on the direction, you were right on where it could go, but unfortunately you were not able to capture that move. But at the same time, you try it again the next day, for example, and then you decide to hold, and that day it doesn't continue as far as you wanted, and it actually reverses quite earlier. So my solution to that is, what I've come up with is, I call it the payroll and let me put my stop below the 50% actually. Yeah. I call it the payroll and the bonus. What I do is I get into a trade and I have a closer target for the payroll, which means it is a target where I will take my profits regardless because I want to get paid for the trade. So that might be, you know, a 1-to-1 risk reward, a 1 to 1.5 on great days, a 2-to-1, whatever. But I have an area where I take the profit. And that is to guarantee that, okay, if it reached this area that I targeted, and I'm not crazy about that selling, by the way, guys, but we'll see. That that profit, you take it and you take the payroll. So you've gotten paid for your work. And then what I'll usually do is I'll wait for a first pullback or whatever, depending on where it's trading. I'll put my stop to break even and then I'll hold the trade, the rest of the trade, for wherever it wants to go. And sometimes I'll get stopped out and it won't continue. And sometimes that, you know, 1 to 1.5 to 1 will turn into a 4 to 1 or 5 to 1 or sometimes even a 10 to 1 trade. And that bonus is the extra that I got. But it doesn't happen as often as the payroll. So what it guarantees is, okay, on profitable trades, I'm always getting paid. And then and then I not only take my profit on the small increment, but I also allow the trade to perform however it wants to perform. So on good days, the trades will outperform, but on bad days where things revert quicker, I'll get paid for the trade and then I won't get the bonus. And why I call them the payroll and the bonus is because ultimately at the end of the day, you always want to get that payroll. You always want to get paid for your trade, preferably a higher risk reward trade, right? But sometimes you will get that bonus and you will get that extra pay for the work you did. And that's why I allow that to happen. All right. Bad at saying I have STH reverse of that today, not taking the profit, then it retraced and hit my stop loss. I don't know what STH means, but okay. I remember you were trading gold, so let's take a quick look at gold to see what happened there. You said you have STH. Well, look at how look guys, look at how well this is performing. We had the consolidation, we had the move up, and we reacted exactly at those highs. You see how right there we had a first rejection, they held it up. We had a second rejection here, and they're still holding it up. So that was to be expected. Oh, something. Sorry, I get lost in acronyms sometimes. You said the Tokyo retrace got you. Yep. Well, the retraces will get us sometimes if our take profits are too close, um, and sometimes they won't. It's uh, it's really an interesting game. This trading game, you know, it's sometimes you do something and then it's the wrong thing. You do something else. So, for example, let's say you get in and then a retrace stops you out, and then you're like, you know what? Next time I'm gonna put my stop lower so that when it retraces, it doesn't stop me out. Guess what usually happens? You put your stop lower, the retrace comes, and then, and then it's not a retrace, it's a complete reversal, and you completely get stopped out and take a bigger loss. So, you know, it's hard. It's a hard game, and you just have to find what works for you and define what works for you and then stick to that, you know? And your stats will gradually show you and tell you what you need to do. And hopefully, in the long run, it all works out. So, we will continue to trade. We will continue to do it with the most discipline we are able to. We will take our calculated risks as much as possible. And at the end of the day, if you do all that, it's not in your hands anymore. It's in the hands of the market. So yeah, that is it. So let's see if we can get that payroll, guys. We're pushing up. We're pushing up, pushing up. This is looking good. We're really close, man. look at look at this candle. Look at this. This is an interesting one, guys. Look at how close we got to to my take profit. That's not even a point. This is crazy. Anyways, we'll express discipline. We don't want to panic. Even though I'm seeing some increased volume here, so that's definitely profit taking. So let's see if the next candle will cooperate and get us out of this trade. So what we want to see from now, let me put this bigger. What we want to see from now, since we got some acceleration there and we're seeing volume, we don't want to see this become a, how do you call that? A reversal candle. Because when you have a move up and a wick and you have increased volume, more often than not, it will be a reversal candle. Of course, if it turns red. But if not, then what it signals is actually shorts having the cover, right? Because they were short, they were trying to short, maybe they thought it was going to go short like I did, and they're having the cover. So we're going to see acceleration towards the upside. So that's where you want to be patient. Of course, it's annoying when this thing comes like a tick away from your take profit, but this is where discipline comes in and psychology and, putting your money where your mouth is. We are waiting. This came very close to my take profit, but we'll see if the next candle can get it or if it's not a complete rejection. And I'm not going to let the first part of this trade put me into a negative spot. So if it can't hold above this candle here, I'll exit the first TP. So let's see if we can get that take profit where we want it. We will get our payroll and we'll get paid for our trade. So let's see. We are so close, guys. All right, we got it. We got it. We got it. We got it. Let's put a round of applause. We got this together. So what happens now? Well, now we are trying to get the bonus. So we got paid for our trade, but we don't want to turn negative. So what do we want to do? We could do two things. We could either move our stop to break even, or we could move it to the next logical low, right? The next logical low for me is this low, right? Where I would be risking only 10 points. Why this low? Well, we broke above the 50% of the second standard deviation. So what do I want to see? If we are going to pull back, I do not want us to go lower than this 50%. So this is a protective stop. And then whatever happens here will decide whether we want to just leave this or not. The other thing you can do if you're not like me and you don't have to stay in front of the screen is you could just put your stop to break even and then you leave the screen for, I don't know, 30 minutes, an hour, the whole day, whatever you decide. But you have another area where you aim for. And it could be the other 50% of this range. It could be there. It could be a matter of points. You're like, oh, I only want to capture 100 points. It could be, well, I just want to capture 50 points. Whatever you want to determine. I'll put mine here for now, and then we'll determine what happens. And then the next reason why this is the next logical spot for me is what? We have a new trend developing. So I'm going to get some lines out of the way so that you guys, well, actually, let's just do the trend here. What is happening here? We've had this developing tertiary trend. So let's put this here. Let's put this here. We have this trend developing here, right? And it is increased in speed. So actually, let me go on the other asset so we could see what the trend looks like. By the way, this would have been a good spot to add, but when I'm talking and I'm not focused on the charts as much, it's a little bit harder for me to do. And I'm trading very small on this 25K account. So just 2 contracts for now because we don't have enough cushion to, account for a lot of negative trades. So right now, and you could see, guys, it's clear as day. We could see clear profit taking. So what is that telling me? It's telling me that the market is thinking the way I'm thinking, right? We are getting to a second standard deviation, so it's a logical place for us to take profit, No problem. We're holding. Now, let's determine what to do with this other contract that we are holding. We've gotten paid today, so we're not panicking. Anything we make on top of that is extra. It is a bonus, right? Okay. So, let's see. Yeah, we were talking about trends. So let me put this on a higher time frame for you guys. I'll just get all these lines out of here so you could just see what I'm seeing. So we don't need that anymore. I'll move this to the side because we don't need that really. And then I'll just keep this around here so I can, pull it back so we can see this liquidity levels once we get back in there. All right. We're looking at a 15-minute chart right now, and we are looking at the trend. So let's completely zoom out on the hourly. What is going on right now? On the hourly, this is our trend. This channel right there, and this channel right there, this is our primary trend. This is how the price is trending over a period of multiple days. Very good. Where do we stand on the primary trend? Well, we pushed up, we pulled back to more or less the middle of this trend, and then we continue to push up. So what do we need to see right now? Well, we have multiple possible targets. And if we are very, very, very bullish, guys, what could happen is we could go and test those highs all the way up there. Now, that might not happen today, but the great thing with the fivers is that you can hold trades overnight. So you might decide, guess what, man? I'm going to put my take profit all the way up there and capture almost 300 points if you want to hold overnight. Why? Because you've gotten that payroll, you've gotten paid for your work today. So now the rest is a bonus. You do with it whatever you want. And psychologically, that has done wonders for me, right? So now that could be a possible target for a swing trade. But we're talking about day trading. So we want to check the trend and control our risk where it makes sense. So we'll go, that's the much higher end take profit. All right, I'll put this here just so I could have it in mind. So now we go down to a 15-minute chart. On a 15-minute chart, we have our other trend, our secondary trend, which is kind of here, right? And this is where we veered off from, and we broke out of this trend. And this trend started since yesterday here, right? And we broke out of it yesterday and then came back to it. So if I continue these lines here, we can see that we had this trend yesterday here. We broke out of it. So we want to see, are we going to break out all the way here, form a top, and then retest it? Maybe, maybe not. We'll see. So this is our secondary trend. We have primary, secondary, and now we're looking at the tertiary trend. This is the trend of the day, right? This is the fast one. What is going on there? And I'll trace it in pink so we could see this trend here. And I'll usually use these lines so we could see it. This makes it clearer. You find the two lows, you trace them. This is the lows, and then we go back to the candlesticks. Okay, so if you're only aiming for a day trade, all you're looking for is for us not to break this trend. If we break this trend, then you're out of the trade, right? And at the point we're at now, we can definitely move our stop to break even, because now we do not want to we don't need to lose at all on this trade. Why? Because guess what? We had the opening range, we broke out of the range, we reached that profit taking level, and we're just trending up. So all you care about is, are we going to continue to trend up? And there's different ways to manage this. If you're like me and all you care about is just waiting to see what happens, you don't care if you get stopped out again or whatever. You just want to see, man, can this thing reach this high? All you care about? Well, you leave your stop break even, you got paid for on the day, and then you wait. If you're trading a different system and you actually want to capture, you don't want to wait until it pulls back all the way here and goes back up and whatever. You don't want all those moves. What you could possibly do is just trail the move. You could trail it on the 1 minute. You could trail it on a 2, a 3, a 5 minute, whatever you want. You could go to a 5 minute. And then you say, well, guess what? What I want to do is every time we have a low, I trail it and I put it under this. And then you would capture, um, a good part of this trade. Right now, all I care about is, can I get this bonus? So can I get at least to here, right? Can I capture another 140, 150, or 130 points? That is what I care about. If it reverts completely back and stops me out there, I do not care, because that was not the goal. And when we're talking about psychology, that is what you need to gradually be able to achieve, right? And what for me has worked is I got my payroll. I got paid for the trade. I do not care about the P&L because I'm already profitable right now, right? It's mathematically simple. I'm going to continue to be profitable if I keep taking these setups like that. All I care about right now is I want to know whether I'm right or wrong. Why? Because I got paid already. So I can hold, I can be patient, and I can keep moving this up however much I want, right? I can test and see, hey, do I want to capture, can I capture 200 points? Let me put this right there. Can I capture 200 points instead of 130, whatever? This is up to you, right? And then when it gets to here, I can decide, well, I've made it to 130 points. So how much points am I willing to give back? Do I want to give back only half of that? Do I want to give back more of that? It's up to you, right? Let me know if I'm making sense, guys. Let me know if I'm making sense. Let me know if what I'm saying is resonating with you, because I see the chat is quiet. You're probably printing a bunch of money, and that's why you're reacting like that. So this is our move right now. This is our new trend, right? We don't need this anymore because we already know this 50%. I could leave it there just as a reference, but we don't really need that anymore. And we are kind of stair stepping up. So I'll make this look like stairs. So this is our elevator. This is how we are gradually climbing out of this range here, right? So yeah, you can, like I said, you can manage this now that we're in profit. You can manage this different ways. And the thing that helps you hold for a long time, because if you were holding all your contracts, you would be stressed out as hell now. You would be stressed out because you're like, man, where do I take profit? Where do I, as soon as, at least for me, as soon as I have taken my payroll and gotten paid for my trade, then it's super easy to hold because I don't care what happens next. I got paid. Now I just want to find out, am I right or am I wrong? If I'm right, I'll make a huge bonus. If I'm wrong, I got paid. I got Tay Keith in the house. Oh, well, Tay Keith, we just traded the ORB live today. We're still holding it. I could show you what we did again. Super good to see you back in the house. We took this ORB on the Qs, on the Nasdaq, and we're holding. We're holding. So let's show you what we did. Oh, you tried it out on the Nasdaq? Man, that is super cool. Let me show you guys a quick preview of what I'll be sharing soon with the community, because we've been working on an indicator, Daniel and I, for this ORB setup, because it really works well in those trending markets. Doesn't work as well on sideways markets, but really does work well on trending markets. And by the way, guys, this is a very logical spot to take your profits right there, because we had the initial move, we did a 50%, we reached the high of that move. So that's what's happening here. We're seeing profit taking. Now what I want to find out is, can this trend hold? Can they hold and rebuy it around these levels? If they can, great. If they cannot, then we'll get stopped out and it's totally fine. All right, so we'll find out if they can hold or not. But let me just show you the indicator real quick, guys, because it really helps. We're pulling back right now on gold. right at this level that I talked about. So interesting one right there. Let's go on the NQ. And then let's put the indicator that I've been working on. It's really going to help your trading when the markets trend. All right, so I have it on a 1 minute, and all it does, all right, it traces the. Let me put the levels on maybe a 3 minute for you. All right, so what it does for you, the indicator we're working on, and we're going to share it with the community, is it traces, you see these blue lines, that's the opening range, and then these green lines are the possible take profit lines, right? So you have your opening range, you take the setup, however, where you want it to take it, and there are entry triggers, and it shows you, okay, here is your first area where you can take profit, and you see how well the price is reacting there. This is awesome. Actually, let me double check that my levels make sense. That's 26.59. Where's my stop? 26. My stop is a little higher, but that's fine. So yeah. And then the next logical area where you could take profit is right here at those 26,200s. And now for the entry trigger, what we use is a trend line break. So our entry trigger today was, well, it was a little high, but it was right here on the breakout of this ORB. But you can determine what you want to do. And I think yesterday, man, this one printed. Let me look at yesterday. Yeah, yesterday it printed. It gave you the entry. So the B's are not as good. And then we have the A plus when it really triggers well. There we have a filter for that. So this says B, but this would have been the best entry. Of course, it's an indicator. It's not going to tell you exactly it's not going to be perfect every time, but you see how you tested the high of the range, you pull back to the 50%. Here you have the break. That's where you enter, and this is a really, really, really great entry because you could have tight stop. You don't have to risk all the way down there. You could risk just there because the logic is what? If you've pulled back to the 50% of the range, if you're really bullish, you're going to hold above that. So you got in there, and then there were two other places where you could have entered. You could have entered here or here. Yesterday I entered here. And then what happens? You have your take profits. You have one there, you have one there. And look at how well this aligned here with this pullback. Of course, if you were doing a swing trade, you could have held. So, so far, so good on the ORB. Let's see what happens with the profit taking right here. How aggressive are they going to be? Are they going to be slow? Are they going to be fast? Are we going to continue to push up? We don't know. We'll see. But so far we're holding. And what I really like, you see how we pull, I had my trend line there and they reacted nicely right there. And we are maintaining the trend. So we will see how far we can push up. 15 minutes left on this stream. So ask away. Let me know what what questions you have, what else you want to see. So far, we are looking good on the trade. It is about, so we got our 1R take profit, and now we're holding to see if we'll get 2R or maybe 2.5R. Or the logic is if we are unable to hold this trend, then I'll just get out because it doesn't make sense anymore. Because if we are unable, so if these buyers are unable to hold these highs and continue to push up, right? So we bought these highs. If these buyers are unable to hold, then what's going to happen is we're going to go and retest this prior level, which is my take profit. But now that we've formed a clear low, a clear level where we can risk off of, we could move our stop a little bit higher there and capture a little bit of an extra bonus. But what we want to see is the same way we got this continued uptrend here, this continued push up, we want price to kind of continue slowly to the upside and go retest either this 50% area or the higher end of this uptrend. And that would be a great target right here before we get that push down and possibly, or that would be another setup. You break the trend, you retest the trend, and then you go test higher. We go here we go retest these levels. So we will see if that happens. But for now, the next logical stop is right here below this low here. And if this was the take profit area, then we'll just revert back and get stopped out. If it wasn't, then we'll continue to move up. But just a quick recap on the ORB we took this morning. Let me get my executions out, show trades. So executions were what? Let me zoom in. We had our opening. Let me get the all right, yeah. All right, we had our opening range. We marked out the range. The range is until 945. So 945 is about here, right? We hit the top of the range, hit the bottom of range, so we form the bottom. What we don't want is, we don't want to stay inside of that range. We want to kind of decisively get out of the range. Now, we had a great entry here that we weren't able to capture, unfortunately, but this would have been a great entry. It's a pullback to the 50% area. So that would have been a nice area. We could see there's a fair, though, for those that use fair value gaps, this was a fair value gap right there. Let me just mark it out for you. This was a fair value gap right there on the up move that we tapped into, and that was the best entry, the best at least confirmed entry. For those that trade VWAP pullbacks, this would have been a good entry, but that's not what I'm doing today. And then what we did was, okay, we saw some rejection, and we had been rejecting these levels multiple times. So we had one rejection, two rejections, three rejections, 4, 5, 6. So we were like, this level is a little suspicious. Let's see. Let's see if we can, in fact, continue to reject. So we got short there, and we said this short is just another confirmation of our long, because we were long biased. We wanted to see, well, are we going to pull back and go retest the 50%, or is this the area where we already got liquidity and we're going to revert back? So we got short with a really tight stop. What happened? We did not continue lower. We continued to revert back up. So this was the pullback to the top of the range. So we got the break. We pulled back to the 50%. So, to the top of the range. And that is our entry signal once we start to revert back up. So I waited 1, 2, 3 minutes for this to kind of push lower to show me its hand. It did not do that. So we reverted long. We got the volume that came in. And then we were like, okay, the crowd is coming in now. We want to buy. We want to continue up. So we added to our position. Once we added to our position, we moved up. What did we do? We expected this to be a selling point. We saw this pullback. We did not panic. Why? Because we were retesting these lows, and we were, for lack of a better term, confirmed bullish. And then we pushed high. What was our target? The high of this range that we copied here. And we got out right there. So there we took our payroll. We got paid for our trade. All right. Now that we got paid for our trade, all we need to do now is decide how long we want to hold this. How do we want to trail this? Where is our next take profit? We're staying calm. We're staying disciplined. And we're looking at logical spots. So what did we do? We did not want to lose our payroll. So we moved our stop to break even, stopped at break even, and then we continued up. So that is what it is. We just continue. I got Mel Rock saying LOL, sleep. So I guess I'm putting you to sleep right now. Let me know what you want to know. Let me know what you want to see. But right now, this is just climbing. We're just holding this. There's not much to do. So ask me what you want. We have about 10 minutes left on the stream. Let me know what you're looking at. We had our reaction on gold. Let me look at gold. Too many lines. Let's get these lines out of the way. Who was asking me about gold this morning? All right, we had Badaf asking about gold. Well, you see how we got that reaction there right at that level. So something to keep in mind. Now we want to see, okay, can we pull back? So we got that reaction. I can adjust this. We got this reaction there. Can we pull back and hold? We want to see, can we hold above this area here? If we're unable to hold above this area, we're going to push lower. Let me look at oil. Oil is getting a push up. What does that mean for equities? Well, it might mean that we are going to reverse to the downside. All right. Well, we are almost at this 50% line here. So this would be, and this is coming to be a logical area where to continue to take profit. So if you want, you can continue to trail your stop here to capture whatever, however much you want to capture, using a 1 minute, using a 5 minute, and then you could trail those lows if you want. So very logical there. And we're getting a continued push up. We're still in the trade. We just want to see how we behave at these levels to determine whether we want to get in or we want to get out. And so far, we are continuing to push up. But here we go. I think we're going for the 2 full standard deviations. Hey, maybe. We might go for the 2 full standard deviations. The only thing to keep in mind, though, is how much pain are you willing to endure? Why? These are logical areas where profit can be taken. So we might get there, right? We might pull back all the way to here or pull back all the way to here and then revert back and go test this level. So it's like, how much pain do you want to endure? How patient do you want to be, right? So yeah, right now I'm just trailing this because I realize the time is coming close and I'll probably get out of this trade as the stream ends to continue my trading. So we'll see. Let me look at this on a higher time frame. Looking good on the 5. Let's look on the 15. The 15 is looking very good. So our stop is right below that $15 level. So we'll see. And if we break out of this trend, let me reset this. If we break out of this trend, then we'll get stopped out. Now, let me, and we'll get stopped out at 2 to 1. But that is totally valid, Take Heath. We might get those 2 full standard deviations. I like that reaction there. I like that reaction there. So can we continue to get those reactions is all we need to find out. The fact that oil is moving might be affecting the indexes, so we'll see. You know, as oil moves up, indexes move down. As oil moves down, indexes move up. They're inversely correlated. Now let's look on the daily chart. Let me just make this a little bit bigger. So on the dailies, remember I told you, well, we might go and target these. So we have this first high there that we might go target. We're still here. We're still at 26,163. So we still have a ways to go, but we might go target this 26,250. We might target 26,350. And then if we're really bullish, those 26,400 or 500. So we'll see. So 1 day, 2 days, usually the third day might be shorter. You know, the candles might get smaller. You see how on this previous 3-day run on, I think this was Friday, so we had a very large expansion here, we had a smaller expansion here, and then it got smaller here. So think of, you know, you're bouncing a basketball. The first bounce is bigger then the second bounce, and then the bounces keep getting smaller and smaller before they revert back. So we might see that here today and get a smaller move, but we'll see. So far, so good. So far, we're moving up. Um, so if we get those two standard deviations, which is around that 26,200, that would be a great day. And that's where I'm probably going to put my last TP. Let's see. There we go. Put it slightly lower here. 200, well, 209, usually 200 round. So we might get to the 180s or 190s and not to the whole 26,200 before reverting. All I want is to capture that before the significant pullback, because eventually during the day we get a decent pullback, and I want to kind of capture that before the pullback. Because we don't know how much the pullback will be. Sometimes it's 30% of the move, sometimes it's 50% of the move before it reverts back up. So we'll see what we get there. But so far, we have been moving very well. Let's look at the ES. Reset that. Yes, it's glitching. What is going on there? The ES is looking weird here. It's like I'm not seeing the prints. I guess I'm on the wrong. Let me load this up again. What is going on? All right, let me just look at it here on all right, ES is looking good. The stream begins at 9 a.m. Eastern every day. So it's from 9 a.m. to 11 a.m. So right now we're going to end in 4 minutes. Maybe eventually in the future we'll have a longer stream, you know, with more hosts and you could see different opinions. But for now we're doing 9 to 11 because that is what I can handle. All right, so right now it is another logical spot where profits could be taken, but I think they anticipated it and took the profits earlier, right there, right before that 50%. So we want to see, okay, can we continue and reconquer and go test that full 2 standard deviations up there? So let's see, take heed if you're gonna be right. But so far, good trading. We're moving up nicely, and I'm gonna continue to trail my my stop below the prior lows as we move up. At 11 o'clock, we might get some erratic moves, and I might get stopped out. But now it's either we're gonna get stopped out here, and we'll make 2 Rs, or a little bit more than 2R. And the other thing is, you know, we get that nice continuation, some nice displacement, and we get that up move. So we'll see. We will see. How are you guys doing today? How is your trading doing? Did you guys capture some moves? Are you green? Let me know in the chat. Let me know. Say green if you're green. Say say not sure if you're red. And remember to like, remember to subscribe. Let me know. But this has been a nice hold. Not too many setbacks. Nice, you know, trend day moving up. So this is great. Of course, we're trading this with very small size because of the account size. But imagine, guys, if you were trading this instead of just two micros, if you were trading this with 2 minis, or maybe you were trading this with you know, 20 micros. That's a great trade. Or maybe you were trading it with even more, 200 micros or 20 minis. Great setup. All right, Takey said green. Nice. Mel Rock, let me know. Are you red? Are you green? Badaf, let me know. Are you red? Are you green? Proceed. Are you red? Are you green? Systematic trader, if you're still here, let me know. Red or green? We had Void in the house. Void, did you avoid the red and stay green? I don't know if Daniel was trading this today, but let me know. All right, guys, we have just 1 minute to go on the stream. So let's see what we get. The 11 o'clock candle is going to open the hourly, and I wouldn't be surprised if we get a wick down and I get stopped out. So we'll see. Of course, we would get stopped out in profit, which is always what you want to see. Just give it a little bit more time. The candle just opened. It is 11 o'clock, so I'm going to close the stream. I wanted to let you guys see what happened. So I'll give it just 30 more seconds. Let's see what happens. Can we get it or not? Ten seconds to go. And 5, 4, 3, 2, 1. Are they going to stop me out or are they going to push it up? Well, I guess we'll find out tomorrow. All right, guys, thank you so much for tuning in. I hope you enjoyed this one. This was a nice trade. Congrats to everybody who's green. And if you're not green, you're just learning. So no worries there. Keep pushing, keep trading. Don't quit. I'll see you same time, same place tomorrow. Take care, guys.